Hey guys, hope you guys had a good FOMC day. So, pretty big hawkish day here. So, if you remember last week, I said the most important thing that will come from this meeting was the dot plot. And once again, as I expected, the dot plot came in very bearish, and was not well received by the market. So essentially, and I gave it all in my written TA, I put everything J Powell had to say in there. But as a pretty much a highlight of what was said, we are expecting one more 25 basis point hike by end of year, which is not priced in. We are also maximally expecting 50 basis points of cuts in 2024. Now, as of right now, markets do have 50 basis points of cuts priced in, but they also don't have the 25 basis point hike priced in. So realistically, markets have, as of now, a 75 basis point of cuts priced in. Also, 2025, the federal funds rate is projected to be far higher than previously expected. So, really, a very bearish tone from Jay Powell. And one of the most important and scary things that he said is that there is a lot of uncertainty about the future. That should be very, very concerning for everybody. So what happened today is we turned this 444.83 level into resistance. This was previous support, as you can see here. Also, we turned the 50 EMA officially into resistance. We've turned the 8 and 20 into a bearish cross under, and we have a huge bearish engulfing candle of yesterday's price action. By all means possible, there is no reason that this market should not continue to sell off tomorrow. Now, again, this happened on the 24th and it happened back here on the 27th. But realistically, there is zero reason for this market to go higher. With this level of technical bearishness and a breakdown out of our range that we've been in, realistically, we've been in the same range right here from basically the 29th until today. There's no reason we shouldn't go lower. So what we should target is minimally this 436.14 to 436.82 double demand. If we can close below this, then we're looking at a bigger move down into this 429 to 431 support area. If by off chance we do get a bounce, then 444.83 is going to be critical resistance to watch. Now, if you zoom out here, this green trend line, you can see taking our March low and our August low, we are officially through that recovery channel. So as of right now, yes, since the October 2020 low, we are 1000% in a bull channel, as you can see here, and we have pretty good downside, really the daily 200 EMA right here to get to before we break the actual up channel. But it is very notable that you can see this bigger red bear channel that dates back to early July here. We are in a downtrend currently. Now, we have not made a new lower low, and that would be breaking below this low right here at 433.01. But if we break that, then we are really officially in a downtrend. Now, going over to futures here, same thing. We broke through that here. And most importantly, we hit my 44.57 target I was eyeing, with the 8 and 20 crossing under and being resistance now, and under the 50 EMA, which as you can see was holding as support and being under our demand. Our next target is this triple demand from at 43.73 to 43.83. So same thing here. If you zoom out, taking our March low and our August low right here, we are technically still in our green bull channel that goes back to February. But realistically, overnight, we are likely to break through that. We would have to have basically a gap up at the new candle here at 6 o'clock. and hold for 44, 48, but that's very unlikely. Again, from a technical standpoint, there is pretty much zero reason why we should not follow through with a bear day tomorrow. But again, market does weird stuff. But as of right now, 44.57, but most importantly, 44.92 to really 45.05 is going to be strong and critical resistance to watch going forward. Going over to the Qs here, same thing. We broke down. We have a massive bearish engulfing candle. The 8 and 20 are crossed under and resistance. We are below the 50 EMA. By all means, our next target is 358.42 and 361.91. Now, same thing here. If we zoom out, if you take the March low and the August low, we officially broke through that bear channel or bear trend there. So what we'll do here differently, and this is the October, where's my October here? So going back to December here, you can see we are potentially going to try to find where our next support is. So we'll go ahead and use these resistances here since we broke through. And let's see if we even have a bull channel here or not. Okay, there we go. So we have basically the March low and this January low. So if you remember, Qs was a little different in October. It was much more flat versus SPY that was a dump and then a pump. So here you can see to basically break what would be, I would consider, let's see, this goes all the way back to October of 2022, almost a year-long up channel. If we break through 360.4 tomorrow, or by Monday, we are under 361.3. We effectively are breaking a year-long up channel. And you can see we have been in a pretty nice down channel here. There's almost a nice little double top forming right here. If you were to take this low area right here, and then you take our top here, our bottom here, our top here, we could be looking at some sort of move like that. Now, again, I'm not sure we have the momentum to see that bearishness of a move, but it is potentially possible. Now, going over to the VIX here, VIX had a massive day. This VIX is an extremely important close and an extremely important move. So I've been saying now for, and this makes a lot of sense why it's happened. I've been saying for basically the last month that the VIX has been manipulated and the VIX has been being suppressed artificially lower. And in doing so, basically markets have been held in a range and also held to push lower. As of right now, the VIX has broken its month-long down channel. We are over the 8 and 20 EMA, and we took back this 14.82 resistance that we've been trying to get through for a couple days now. The most important thing that you want to look at with the VIX here is the fact that the VIX closed at high a day. Why is that important? Because if you go back to where's March at here? Let's see. Let's get the March. March shows a really good reason why it matters. So you can see here in March, this was the banking crisis. You have these candles that are clear continuation candles, and then we started getting these massive wick candles to the upside. What this showed was that people were putting on those bearish hedges, but were pretty much taking them off before end of day. With taking off all of those hedges, it was basically saying that markets were no longer bearish. So when you see the VIX with a continuation to the upside, so much like this day right here, and this body to the upside, and this body to the upside, you see we finally got our wick right here, and that was the top. So that basically signifies that we are still going to see likely downside. So again, for me, I do not see a bullish case for at least tomorrow, but we will see what the market brings. The market has been unpredictable lately, but I am certainly looking for downside tomorrow. Hope you guys had a good day trading today, and I will see you guys tomorrow.